Hello, I'm Natalie MacDonald and you're watching Sydney Direct on Dukascopy TV. Today I caught up with Julia Lee of Bell Direct to talk some of the market action that we've been seeing on the Australian financial markets this week. Julia Lee, thank you so much for taking the time to chat to Dukascopy TV once again. A pleasure to have you.
Thanks, Natalie. It's my pleasure.
No worries at all. Now, we've seen really quite the turnaround in ASX performance this week. Shares are continuing that push higher. Walk us through sort of some of the key points of the trading week.
I think the market has bounced back very strongly, and for a number of reasons. One, we've seen stabilisation in terms of China, and I think that's been very important for the Australian share market. And secondly, the Greece bailout that's going through obviously stabilises the market as well. I think looking forward, though, there's three factors that investors should really focus on. One is China, secondly is the US, and third is what's happening in Europe. I think the most important for Australian investors will be China, and what we have seen is growth slowing down over the last 7 years. Economic cycles, like most things, are cyclical. So really with China, we're trying to focus on that point where we do start to see growth pick up, which will be a positive for global growth and especially for some of those Australian miners, which form such a large part of the Aussie share market. The second most important thing I think for investors to focus on is what's happening in terms of the US. In terms of US interest rates, we're likely to see them rise for the first time this year, and that's going to have a major impact on things like the yield trade. Now, the yield trade has been so popular for a number of reasons. One, because we have seen those yield type stocks being priced like bonds. So they've really been moving in line with bond prices. As we see longer term yields rising, we of course see bond prices falling, and usually the share prices of some of those high yield stocks coming under a little bit of pressure as well. So that's really an important thing for investors to watch. Also, there's a currency implication of that. Australia has been the beneficiary of the carry trade, and that's where investors around the world invest in a lower yielding currency like the US currency and then invested in a high yielding currency like the Aussie dollar. And of course, some of that money has found its way into the market and into some of our higher yielding stock. So as we see interest rates falling in Australia, the attractiveness of that carry trade also starts to unwind. So I think they're the two major issues for investors to focus on till the end of the year: China and what's happening in terms of the US, especially the impact on interest rate expectations and currency.
We've seen mining and also mining services firms, BHP, Bradkin, really sort of leading that trend higher. But as we know, this resources sector is incredibly volatile as well, and just as quick to turn to the downside, really. Does that make it difficult for investors to buy into this move upwards?
It's extremely difficult for investors to focus on commodities at the moment, and that's because of the volatility, the fact that we have seen such big moves in such a short period of time, both on the upside as well as the downside. It's a perfect scenario for traders, though, because we get very quick overbought and oversold positions, which means they can make trading profits in a short amount of time. But for longer term investors, that volatility probably adds another layer of risk, and it's harder to sleep at night with that volatility. So I think these commodity-based stocks, you do have to be nimble with timing. So it's more of a trading stock rather than an investment opportunity.
We've also seen sort of quite a negative pushback from the banks as well off the back of APRA's announcement regarding capital raising. As we're heading into that earnings season, is that a bit of a concern?
It is a concern, but I think for the last 5 years, we have seen the banks not really trading on fundamentals, but more trading on the macro conditions globally, and in particular, the very low yields that we've seen throughout the globe. So I think it's more important to focus on what's happening in terms of the US interest rate market and bond yields for those banks rather than the undercurrents, because we have seen banks expensive for a long time and they've continued to be overbought and continue to be a very popular trade. Now, the impact that APRA's announcement is likely to have is, well, not very much. We've seen that this week that's already been priced into the bank's share price. Of course, having to have more capital on their books usually takes away from their ability to return, to make returns on their money because some of their capital is locked away. So I guess longer term, it will have an impact on earnings, but really what's been driving the bank's share price is this popularity of yield and this global search for yield, and in that, interest rate expectations in the US are going to be a big factor.
Now, lastly, Julia, last week, Ben LeBrun of Options Express told Dukascopy TV that 6,000 level that we'd all sort of been hoping for earlier in the year may now be mission improbable by year end. Would you agree on that one?
Not necessarily. I think it's all about the commodity space, and we have seen iron ore as well as oil, two big areas which have basically halved within the past year. Now, commodities are extremely volatile, and if we do see a big bounce back before year end, then that 6,000 point mark doesn't seem improbable at all. It seems highly possible. So I think it will be dependent on the commodities side of the market, the materials and the energy sector, which make up around about 40% of the market. So an uptick in iron ore and an uptick in oil prices would be a positive thing for the Australian share market.
Julia, thank you so much. Great to receive your comments today.
Thanks, Natalie.
Our thanks there to Julia Lee at Bell Direct for her comments. For more FX analysis and market insights, do stay tuned to Dukascopy TV. For now, though, it's goodbye from me.